Hello and welcome to Asking for a Trend. I'm Josh Lipton, and for the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. Well, quantum computing is in the spotlight as Infleqtion makes its public debut on the New York Stock Exchange under the ticker INFQ. Joining me now is the CEO of Infleqtion, Matt Kinsella. Matt, it is good to see you. Maybe start here, Matt. Why go public now? You know, why this moment in time, Matt? What were sort of the puts and takes that factored into that decision, and why via SPAC, Matt?
Well, first of all, thanks so much for having me, Josh. It's a pleasure to be here. And the answer to your question is why now? And really, I think about this as a capital raising event. Yes, going public is part of that event, but the reason we are doing this is to raise the $550 million that we raised. And the reason we did it now is because the time is now. Quantum is here, and it's time to make sure we are capitalized to address the opportunity that's ahead of us. Why a SPAC? You know, we looked at a number of different options. We looked at raising another private round of capital. We had a strong Series C that we raised back at the beginning of last year. We looked at regular way IPO, and ultimately, after evaluating all of the options, and the number one principle was to get the deal done and raise the capital, a SPAC emerged as the best way to go, especially because we got to work with such a high quality partner like Churchill.
Matt, I've heard you talk about how we are in phase one, you have said, of the quantum revolution. What does that mean in simple layman's terms, Matt? Phase one.
Well, in our particular version of quantum, which if you actually have a little prop here I can show you, these are our quantum cores, and they're at the heart of all of the products that we bring into the market. And we have a very flexible quantum modality. And phase one in our case means we're addressing quantum sensing. And so we've looked at NVIDIA and how they built their business, and they had this very powerful GPU engine, which they first pointed at the gaming market, and then the crypto market, then ultimately their, call it phase two or crown jewel or whatever you want to call it, of quantum computing came to be, of large language models came to be. And the way we're thinking about the world is we're monetizing this very powerful quantum core today in things like clocks and sensors, call that phase one, and building towards our phase two or our large language model crown jewel of quantum computing, which we believe we will get to in 2028.
So Matt, you know the knock on quantum. You'll hear critics say, listen, there's very limited real-world applications right now. So when you mention there clocks and sensors, can you just elaborate on what you mean by that, and which industries, which verticals, where do you see the opportunity?
Yeah. So I'll give you a couple real-world examples. Last week we announced a big deal with NASA, where we're sending some of our sensors up into space to sense gravity, and especially changes in gravity on the Earth's surface. And when you can sense changes in gravity on the Earth's surface, you can infer some very interesting things about what's happening both on and below the Earth's surface. And so we can start to track the melting of polar ice caps or the depletion of aquifers, but also interestingly, we can start to see tunnels being dug underneath the Earth or the movement of heavy materials. So some of the real world use cases when you can sense the world with the precision that quantum brings. If we look at timekeeping, interestingly, if you think about what GPS is a position, navigation, and timing system, but it's actually a capital T. The time is the most important thing that comes down to us from GPS. And unfortunately, GPS is getting increasingly prone to being spoofed or denied. And if you can't get the time signal from GPS, if it's being spoofed or denied, your critical infrastructure can't synchronize. The New York Stock Exchange that I'm standing in here today relies on timekeeping to synchronize all their trades. And if that were to go away, we would lose billions of dollars of global GDP a day. And so what we're able to do is provide clocks that are even more precise than GPS timing, but in a local and unspoofable form factor. So you can think of it as a backup plan to GPS going down, but also an increase in performance.
Matt,
so those are a couple of real-world use cases of quantum sensing.
You work in such a red-hot sector, Matt. We talk a lot about it on this show. I mean, there's very smart people with a lot of money chasing this opportunity. What, Matt, makes you all sort of different? What's the competitive advantage?
So the underlying modality we're using, called neutral atoms, going back to what I was saying in our strategy, is highly flexible. So we can start to monetize and generate gross profit dollars in these more near-term quantum sensing applications where we truly have orders of magnitude 10, 100, 1,000 times increases in performance. And that's been the bedrock of how we generated $29 million in revenue in 2024. Then we announced we did $50 million in booked and awarded business in 2025, which sets the ground for growth. So we're able to do this by bringing in gross profit dollars to minimize our burn. So we're actually a very capital intensive way to go about bringing quantum computers into the world. So I think that's our biggest differentiation, is the strategy that we're pursuing, which is brought about by the fact that we are using this very flexible room temperature quantum modality called neutral atoms.
Kind of a broader geopolitical question, Matt. I'm just curious to get your take on this. Who leads in quantum, Matt? Is it the US or China?
It's a great question. So it is, make no mistake, it's a huge race between the US and China. I would say there are various aspects of quantum where the US leads and various aspects of quantum where China leads. And China is out investing the US by a pretty wide margin. The good news is the United States just made quantum one of the 6 critical technologies that we absolutely must win from a national security perspective. They call it quantum battlefield information dominance. And there's a lot of talk about a possible executive order coming out from the president on quantum soon. So the US is recognizing that this is a race and starting to invest behind it, because it will be an issue of absolute national security that the US does win this race.
And finally, Matt, just curious, this is a question that also pops up. Long term, Matt, what kind of challenge do you think quantum computers could pose to the security of that Bitcoin blockchain?
The Bitcoin blockchain the encryption is based on a fundamental inability of classical computers to perform a certain type of calculation. And that is, if we have a very long string of numbers, figuring out what the 2 prime numbers to multiply together to get that string of long numbers is. That's the type of problem that would take a classical computer, even the most powerful GPU cluster, a very long time to crack. That is the type of problem that a quantum computer will be able to crack when it's powerful enough fairly easily, because they can simulate all potential outcomes at once and then collapse into the answer. So there is a big risk to the Bitcoin blockchain from quantum. The good news is, before we get to that, quantum will be doing all sorts of really useful things and helpful things to the world, bringing new drugs into the world, bringing new materials into the world, maybe make your iPhone battery last a year instead of a day. But ultimately, yes, the same underlying technology will pose a risk to the blockchain. My guess is they'll figure out a way to fork it and fortify it against quantum, but as it stands today, it is at risk.
Matt, congrats again to you and the company on a big day. Thanks for being on the show.
Thanks, Josh. Thanks for having me.
Stick around. Much more As for a Trend still to come. U.S. stocks squeezing out gains in a volatile trading day, and Yahoo Finance's Jared Blikre joining us now with the trading day takeaways. Jared.
Thank you, Josh. Let's talk about what is bouncing back today versus what we saw last week, because we saw a number of industries taken out. And so today I had my eye on transports rebounding, and picture's worth 1,000 words. So we'll start right here. Here's our transport heat maps. Most of these are in the Dow Transportation Index, but not all of them. I've added some other things there, but you can see a lot of green. Now, if let's do the 4-day view, you can still see that some of these, especially those lesser known names that got really whacked, the logistics companies like C.H. Robinson and Expeditors, those are still in the red there, RXO as well, but for the most part, climbed back. And it wasn't just transports. I was also looking at brokers and asset managers, but guess what? The selling continued in these guys. These actually got hit more or before transports got hit last week. And just to round out the discussion, I'll show you what real estate did. Here you go. And we'll put it out on a 4-day view as well. And you can see, you got some winners, you got some losers here. CWK still down 24%. So the impact has been felt. And one more thing, I just want to show you Dow Industrials versus transports. Here's industrials all the way down here. It's up 3% year to date. Nothing to write home about, but not bad. Dow Transports still up 12.5% after that drubbing they took last week. And you can see they've clawed back about half of those gains, or half of those losses now.
What about AI? That whack anything down today?
Yes, I think we're back to the original SaaSpocalypse, except I'm calling it SaaSmageddon, because you got to change these things up here. I will give you another picture. And first, let's go to softwares versus semis. This is year to date. Software down 23%, semiconductors up 17.5% on the 1-year chart. And I've showed this before here, but it's worth remembering how big the disparity is. So you can see semis up 58 versus negative 24 for software. They really diverged in about September. September of last year. September was when so many software companies peaked, and they're just struggling to get off the dime here. You might have one good day, but it'll take me a second here to get back to the software, and there we go. So you might have one good day or two, but you're not stringing together a whole week like semiconductors might. So here you go. Here's a picture of today, and I'll give you the year to date as well. Boom, a lot of red there.
Now, did you talk to Tom Bruni recently?
Thank you.
Yes.
Because we talked to Tom Bruni, Stocks in Translation. He's the editor-in-chief of StockTwits, and here's what he had to say about what's going on with the SaaSmageddon.
They're having to figure out how to implement AI into their businesses to avoid becoming completely obsolete. And the market is still trying to figure out like what the right valuation for those companies are and what type of growth rate they'll be able to manage in the face of AI. So we're just in this environment where people are very fearful of software stocks and the overall industry impact. And it's kind of like sell now, ask questions later.
All right. And we're still asking questions. So there you go.
You want to end here on the metals?
Let's do that because kind of a down day. It wasn't a huge down day, but some key technical levels were broken. So let's see. Let's go to silver first, down 5.72%, and I'll give the year to date. I kind of got to show candlesticks, even though they're a little bit hard to see there. This was actually the lowest close since the very first trading day of the year. Hard to see there, but the second lowest day of the year. So silver's kind of breaking down here. And I was also taking a look at copper, HG equals up. There we go. So that was down 2%. And let me put it back on the lines here. So it has broken support and it closed just under its 200-day moving average. So that's a very subtle signal, technical one that there might be some more selling to come. And finally, gold. Let's see if I can find GC equals F. There we go, down 3% today. And gold is still kind of just in this sideways pattern. So I'm not seeing any key technical levels violated there.
All right, thank you, buddy.
You bet.
Appreciate it. Stick around. Much more Ask for a Trend still to come. Walmart earnings due out Thursday morning. With new leadership and a fresh $1 trillion market cap, investors will be looking to see if Walmart can continue to outperform in this uncertain environment. Corey Tarlow, Jefferies Senior Vice President of Equity Research, joined Julie Hyman for a look ahead at Walmart's results.
So the holiday season, I think, went very well. We saw across a number of retailers that reported preliminary sales in early January that they had record holidays for a number of retailers. So I don't think that Walmart's going to be deviating from that trend that we've seen from other retailers that have reported thus far. So we're at about 4.5% same-store sales growth for the fourth quarter. Consensus is closer to about a 4. So that's really not where we think the surprise lies. The surprise is probably more in kind of what the forward outlook is going to be. And we just think that the messaging there is going to be one of conservatism, very simply.
Yeah, I mean, I'm struck by General Mills coming out today and talking about, consumer sentiment continuing to be weak, heightened uncertainty, and obviously there's not a one-to-one comparison between a General Mills and a Walmart, but, they have some of the same customers who are buying those groceries at Walmart. So, how is that going to feed through then into that outlook?
It's a great question. And we also had Pepsi just a few weeks ago announce price cuts of up to 15%. Are they going to be that severe across the board? Probably not. But I think you have this is sort of culmination of lower inflation, of maximum fair pricing, which is going to put a cap on drug pricing in certain areas. You have the GLP-1 switching from an injectable to a pill. All of this presenting probably a little bit of a headwind to overall pricing growth. And pricing growth is a lot of times a benefit for retailers because it's more of a pass-through mechanism. But if you're going to see lower pricing growth in 2026 versus 2025, and I'll just give you a stat around this, food inflation in Walmart's business was, let's call it about 130 basis points in 2026. We see that potentially slowing to about 50 bips, which is probably about closer to normal in 2026. So the idea that they're going to post maybe or start at least the year at like a 4% plus comp growth is probably a bit too ambitious. And just for, again, historical context, the last 2 years, they've averaged, if you sans last 3 years, was 5% sales growth and about 10% profit growth. They probably just don't start there this year. So we think, and we put this in our research, maybe a 4% sales growth rate and like an 8% profit growth rate seems reasonable to start.
And is all of that enough to propel the stock higher from here, right? Like, you have a buy rating on this thing, but you only have $132 price target, and that's where the stock is. So that doesn't imply, I mean, I know you can't tell me if you're going to raise it after they come out with their earnings, but, we'll be watching for that, I guess. But, so what's the catalyst for the stock going to be then?
I think it's going to come in the form of higher earnings and potentially even a higher multiple as well. So if you look at the multiple today, it's 45 times. If you look at it relative to Costco's actually peaked in the mid 50s. So for a multiple to stretch for a retailer that's compounding, where it has consistent sales growth, accelerating profit growth, you do have the opportunity or the willingness for investors to pay more for that asset. But fundamentally, our upside case is actually our price target's 130, or around 130. Upside price target's actually 160. And that's based on an earnings number that's about $3.50 by fiscal 2028. And if you just hold the multiple relatively consistent at about 45 times, you can actually get to $160. And we don't think that is unreasonable in the case of outcomes for Walmart stock.
Corey, we haven't really talked about the new CEO, right, Tom Furner, and not to mention that one of their main competitors, Target's getting a new CEO, or has a new CEO in the form of Michael Fidelki as well. What do these guys need to? I mean, the job at Target is quite different than the job at Walmart now, I would argue. But let's start with Furner. What do you think he needs to accomplish?
From John, I think we want just more of the same, because under Doug, we had a period of investment and then a period of harvesting those investments. And now Walmart's in the harvesting phase where you really have the opportunity to accelerate profitable growth. And e-com, which was a drag for this business for years, decades even, is now the growth engine for Walmart. So the focus, I think, and this is very clear if you look at the recent executive appointments that John Furner made, over the last several weeks, because he appointed Dave Gugina to be CEO of Walmart US. Dave actually was previously leading the supply chain for Walmart and their e-commerce division. So it's a very kind of clear focus on driving profitable growth through e-commerce, which again is driving most of the growth. They posted a 4.5% same-store sales number in Q3. Of that 4.5%, 4.4 of those percentage points were driven by e-commerce. So that is where the growth is. And I think that's where John is most likely to be focused as we look ahead, because the store business, while it's very, very important and serves as sort of a nexus or a hub for its e-com business, the incrementality, if you will, is going to be stemming from the e-commerce growth.
So I got to ask you about Target before I let you go, Corey, because there, as I said, Michael Fidelki taking over, and you've held on to hope for this one, and it hasn't paid off. Is it finally going to pay off under him? What needs to happen there to turn Target's fortunes?
Well, it's done well in the last several months. But
I mean, you look at a 5-year chart of this thing, Corey. The last several months are like a blip.
Yes. That said, I think that what we were looking for Michael is very simple, and I asked this question on the last earnings call, is one word: change. Because that's what the market wanted when we got the CEO appointment. They wanted an outside perspective. But our thought is you don't necessarily need that. Let's look at what he's done so far to drive change in the business. He's taken down prices on thousands of items across the store. He has communicated that he's cutting up to 10% of headcount at the corporate headquarters in SG&A. So he's committed to driving market share through volume and lower prices. and then being disciplined on cost. And then lastly, they also talked about upping CapEx by up to 25%, going from $4 billion spent to up to $5 billion spent on things like stores, supply chain, AI, automation. I mean, these are the kinds of things, and Target owns almost all their real estate, by the way. So they have great assets that they can leverage within grocery, within general merchandise, within their private label business. And all of this kind of comes together, we think, very nicely, especially at this valuation, which is incredibly undemanding in our view, to help drive change, higher sales, higher numbers, and get back to more profitable growth for one of America's leading retailers, in our view.
Time now for To Watch Wednesday, February 18th. It's going to be a busy day for markets with earnings from Carvana, DoorDash, and eBay coming in on Wednesday. Booking Holdings reporting fourth quarter results. Analysts are looking for roughly 12% revenue growth as global leisure demand remains stable and alternative accommodations continue to expand. But a big question may be forward-looking with how management addresses the potential threat from AI-powered travel planning tools that could shift traffic away from traditional online search. In energy, Occidental is announcing fourth quarter results as oil prices soften. Analysts expecting the company to exit the year with stable production from its core U.S. onshore assets, but weaker crude prices could pressure earnings and free cash flow. Investors will be looking for any commentary on capital discipline and how the recent $9.7 billion OxyChem divestiture strengthens the balance sheet, potentially setting up more capital returns in 2026. On the macro front, Federal Reserve is releasing minutes from its January FOMC meeting in which the central bank held rates steady. Wall Street will be parsing the details for clues on the policy path, particularly around inflation, the labor market, and how unified the committee is on the outlook for rates in 2026. And finally, fresh housing data. Economists forecasting December housing starts to come in at an annualized rate of 1.31 million, while building permits factor in at 1.4 million. This coming after homebuilder confidence fell on Tuesday as elevated rates and affordability weigh on the housing market. That's a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wallet.